Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, July the 11th, 2016. My name is Doug McKay. I'm the founder and head moderator for Quantum Leap Futures. Each morning we get together to take a look at the market, macro to micro, take a look at the structure, drill down to the targets and the trade levels and our hypotheses for the day. We'll get going in just 1 second. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do this live each day in the go-to, and then we do live trading and analysis during the course of the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a look at the news. I mean, obviously, overnight, we went up and put in a new unadjusted all-time high. So we have an unadjusted all-time high, an adjusted all-time high at 2133, an unadjusted high at 2134. We set this up on Friday to make the move to do it. We basically held the 2100 level on Friday and slowly grinded our way up into putting in at what that time was a new adjusted all-time high at 2125.50. Closed near the highs, and then we opened up beginning of this week at 2120.25 in the Globex last night, and worked our way up into the 2133. So very strong upward trend. We have a zipper going on right now. I'll be watching the top of the zipper. If we can get back above this 2129, there is going to be a measured move. Let's just take a quick look at it. So approximately the measured move is going to put us up into 2132.50. I think that we'll probably see this 2134 taken out today, but we don't know for sure. We could get a pullback before that happens. I'm looking for a pullback to the 2117, 2118. We left a single down there on Friday at 2118.75. The composite, where we accepted value, the 5-day, 6-day if you count the holiday, VPOC is at 2087. The 2-day pitchfork, I want profile. The 2-day, just before they broke out, was at 2087. So 2087 is both the last accepted price before they broke out and the 5-day microcomposite VPOC. So if they get below the 2095, I'm looking for a move back down to this 87. This is going to be our key support below us. But we did have a lot of volume going off in the 2018 and 2017. They stole the VPOC into the close, and the VPOC shifted up to 2122.50. But really, the price acceptance that's most important from Friday is going to be this 2117.25. We should be looking at the midpoint too, because this is a significant breakout candle, so we always look for 50% pullback to the significant breakout candle, and that would put us down in the 2014.50 area for that to be accomplished. Let's not get ahead of ourselves. Let's first take a look at the news. We just had housing starts in Canada. We're up significantly. We don't really have any news until 10 o'clock Eastern time. We've got FOMC George speaking, and then we've got labor market condition index month over month, and then that's it for this news. It is the start of earnings. Alcoa will start their earnings session, or start the earnings session off tonight after the market closes, and then we've got pretty much a pretty strong calendar throughout the next few weeks on earnings. But no other scheduled news for today in terms of financial calendar. Just going to go back and start with the basic morning routine, which I always like to do, and I start with a monthly using a 9 EMA and a 20 SMA, looking at where we are within the trend. You can see that the monthly had the strong trend, and then we challenged it at the end of 2015, beginning of 2016, and since then we've taken it back and we've held above the 9 and the 20 on the closes. We're starting to get a little bit of slope and separation. They came down and tested the 9 and bounced right off of it on this last monthly candle. So we have the start of a continuation pattern on the trend on the monthly. On the weekly, same thing. We've got slope and separation. Do have a bit of a technical gap here. A technical gap move down will take us down to that 2087. That's why I'm saying that's going to be key support for us right now, is at the 2087, but the trend is still to the upside on the weekly. On the daily, same thing. Got slope and separation now. Move down to test the 9 would take us down to 2095 area. So just trend is still up on the daily. On the 4-hour, same thing. Strong slope and separation. Move to test the 9 EMA takes us down into that 2117.50 area, which is what I'm looking for as a possibility of a pullback today if we get one. We do have a bit of a Mr. Sneaky. I wouldn't really call this so much a FUBAR because it doesn't have the volume spike on the 4-hour, but we do have a Mr. Sneaky and a tech gap, so we could get a possibility of a move down on the 4-hour. Remember, all these patterns have to be related to the time frame that they're in. On the 1-hour, you can see that we did have the FUBAR, Mr. Sneaky, tech gap, and we did close it out, and now we're holding the 9. They tested the 20, we're holding the 9. We're losing a little bit of slope and separation, but the trend is still up on the 1-hour. On the 30-minute, you're going to see a pattern here as we move down into the smaller time frames. You can see we had the FUBAR, Mr. Sneaky, and tech gap, and we closed it out. Violated the trend to the downside, then took it back, and we're basically in consolidation sideways on the 30-minute. On the 15-minute, same thing. FUBAR, Mr. Sneaky, tech gap, close it out, consolidate, and move sideways. And then on the 5-minute, same thing. FUBAR, Mr. Sneaky, tech gap, move down, close that, go sideways. Violate the trend, try to take it back, violate. We're just getting into a consolidation mode in around that 2180, 2128, which is our overnight VPOC right now at 28.50. Okay, so again, just step back, take a look at the bigger picture. We are now in a breakout mode in new uncharted territories. We really don't have any prior volume to guide us, so we have to rely on measured moves and on the smaller time frame volume profile to give us our areas. Key ones to keep an eye out right now, obviously 21.28.50, 21.22.25, and then the big one down here at the 21.17, 21.18 area. Going to put a little bit of a slush area between that 18 because we've got that 18.75 naked single, and then we've got the 21.17.50 and the 21.17 CHVN. And then it gets very thin below. So if we don't hold this 21.17, look for that midpoint pullback to the 14.50 level, and then possibly down to test the prior all-time adjusted high at 21.1075, and inside of the 10s, look for a move back to the 650, or more importantly, the 6 1/4, which would be the return to the scene of the crime on the Brexit sell-off that started at the 21.06 1/4. NFP, we've got a NFP range of 21.10 down to 20.97, and that is pretty much the thin area of the profile, so we could slip through that very easily. And then the key line in the sand below us is going to be 21.03 1/4 right now, and below that I'm looking for a move back to the 20.87 area. Maybe finding some support in the 20.95, but really if we get back inside of this microcomposite, if I bring it to the front, you can see that the value area high is 20.9775. Inside of that, then we can look for a move into the 20.87 and then see if we can hold this. I mean, the next key support is now down at 20.73, which was our key line in the sand prior to getting this breakout. All right, so taking a look at the overnight session, we have a overnight high at 21.33, which is also our unadjusted all-time high now. And this is a perfect example of the prior unadjusted high or prior contract high and what I call equalization of the prior high. Whereas even though we adjusted the high based on the contract, that 21.34 that we put in the prior contract still becomes a magnet, and the two highs like to be equalized out. This is something that I've observed over many years of putting in all-time highs. When it happens, it's rarely left unattended or unequalized from one contract to the other. So we've got the overnight high there. The overnight low is down at 21.20. And our VPOC, which is not likely to shift, we've got good kurtosis here at 21.28. Did shift slightly to 21.28 1/4. And there's really no other information. Once we got up here, we got into some serious balance. There is a LVN here, down here at 21.50, but I don't think it's strong enough to really, have a level on our chart based on just the LVN by itself. So put this down, extend this up, and again, there's not much. Let's just take a quick look at the flex levels. These are measured moves. We do have a measured move right now at 21.40 1/4. We had that measured move at 31.75, but that's been taken out, and that's really all we have in terms of measured move. I'm going to have to take another look at if we've got any other measured moves that I can find, but so far I haven't been able to find any. So in terms of trading this, obviously we're going to open auction out of range, out of value. We do have a gap, but it's not a real serious gap, so gap rules do not come into play. 21.29 1/4 if we opened up right here based on the close of the session, which was 21.1975. It's basically about a 10-point gap, and we're likely to close that gap. It's not above the 15 points where you have a low probability. In terms of trade levels, there's not much I can use from the overnight session until we get down into the range. I'm going to be using a little slush zone from 21.25.50 down to 21.24.75. I don't want to be long unless I'm above 25.50. I don't want to be short and or go short unless I'm below the 21.24 and get inside of the value. And then the immediate target, of course, is going to be the naked VPOC that we stole on the close. They shifted it as we closed on Friday up to 21.22.50. And then we've got the naked close and the overnight low. The overnight low is at 20. The close is at 19.75, so this will be our key target back inside of value. And then we do have that 18 level, 18 to 17. Again, that's going to become a target and a trade level between the two. We've got the single. If you look on the market profile, you can see that we have the single down here at 21.18.75. There's another one down at 21.15.75 and another one down at 21.14. So if we're looking for areas that need to hold, the first one comes at this 21.18.75 to 21.17.75. If they don't hold that, then I'm targeting down towards that first one at 21.15.75. Was it 75 or quarter? 75. 21.15.75. And 21.14.50. And remember, the 21.14.50 is also 50% of the significant breakout candle. Okay, and then below that we've got the value area low at 21.12.25, and below that I'd be targeting the previous all-time high at 10.75. A little bit of support coming in here at 21.08.75. Then it's 21.06.50. Our 20-day ATR right now, 20-period daily, is 32.64. So based on the overnight high of 21.33, our daily downside ATR target is all the way down at 21.01.50. But remember, we're watching this 21.03.25 as our key line in the sand. I'm actually going to use the 21.03.50. And if we get below that, I'm looking for us to ring the daily ATR. We've got the range high and a gap fill that we have not put in, a range gap down at the 21.02.25. I'm really expecting to come down and test this 2100. And then below that, we've got 97.75. That's the value area high of the 6-day microcomposite, and then the next target below that is the CLVN at 95, and below 95 we've got the naked close at 92 and naked VPOC at 90.50, but the key target below is the microcomposite VPOC down here at the 87. And then below 87, we've got the value area high on the longer term microcomposite at 20.80.50. We've got the range low and value area low from the trend day at 81.75, and then the target below is that 79. You all know how important that's been. And then all our regular levels, 73 now becomes our key support. That gives us all our levels to the downside. Unfortunately, to the upside, we don't have a lot. We've got the one measured move up at 40 1/4. And then 2150 as a quarter number. And then our daily upside ATR is all the way up here to 2152.75. So we do have the possibility of range extension above the all-time highs based on the daily ATR. So we're not stretched out until we get above 22.75. I'm not going to bother with the weeklies yet because we're just starting the week, but we'll put them in tomorrow. So what is my main hypothesis? My main hypothesis is an open auction out of range, a move down into test the range high and the value area high from Friday, chop around here, then push down, and then come down into this 17.75 level, take out the naked VPOC and the naked close and the overnight low, and then find buyers and work our way back up towards that 21.34 to finish what it attempted to do in the overnight session. So hypo 1 is open auction out of range, move down, chop on the range high, push through, come down into somewhere between the 21 area and the 17.75, find initiative buyers, and then push up through the range high and come and put in a new all-time high again, and probably close somewhere up in the 2130s, maybe even a probe up into the 2140s. So that's hypo 1. Hypo 2 is opposite of that, open auction out of range, a push up somewhere between 2134 and 2140, finding responsive sellers, then rotating us back down, chopping at the range high from Friday, then pushing down through and finishing the auction down into the 21.1775 area. So hypo 2 is open auction out of range, a push up, failure somewhere between the 34 and 40 area, then rotate down and come back inside of the range from Friday and come and take out some of these targets. So that's hypo 2. Hypo 3 is an open auction out of range, a move down, chop here, push through to the 17.75, chop around in there again, and then push down and start testing some of these lower areas of the distribution, the lower distribution or lack of distribution, finish the auction somewhere and sort of chop around between the 2100 and the 2117 area. So hypo 3 is move down on the open, chop, push through, chop some more in the 17 to 18 area, and then fail and come down and rotate down inside of the lower range of Friday. And then hypo 4 is an open drive, come up, chop around into the 21, 33, 34, and then get a continuation wave and get a gap and go day and a push up towards the 2150 area and the daily upside ATR target, and close on the highs and give us another gap and go day and extend this these gaps that we keep getting. And this would probably be an exhaustive gap, and then after this I'd be looking for a bigger, not huge, but a more significant pullback down into the 2087 area, but that's another day. So Hypo 4 is an open drive, push up, chop, get continuation, chop, and just grind our way up as a gap and go day. So that's my 4 main hypotheses. Looking at the Keltner, you can see that we've created the zipper. We have a measured move on the zipper up into 3250. We should put a target there, 3250. Getting a cluster here, and Keltner center lines at 2126.75. Get below that, look for them to move down and take out that naked VPOC down in the 2122 area and the close. And that would probably put us near the Keltner lower line. Take a quick look at gold. This volume in. Value is still above us at 1370.50. We've broken below the 63.20 CLVN. We said that we'd likely come back to this 1353 if we didn't hold that, and we have come back, and we're actually trading around that right now, and that's basically near our Globex low in gold. I expect gold to chop in this area and maybe even come down and test this area down here at the 1321.90 area again. All depends on, if we continue to get rallies in the indices. I think gold's going to come down just slightly back down into the lower 1300s, but not much I can see on gold right now. If we do get above the 63.20, look for them to move back up into balance into that 1370.50 area, maybe even the 1372.80. So that's what I'm looking at. You can see we're coming up to test and breakout of this zipper here. Watch how they dissipate the energy moving up. You see it push up and then they pull back to this 29 area. You can probably take the long into the 30, at least the 31.75 test of the upper Keltner. Just be careful because it's going to be on an open, and it's we don't know what the participants are going to do once we open into the RTH session. Anyway, that's all. Trade well, trade safe, and we'll catch you on the flip side.